What do you think of a crypto exchange that has been around for less than 1 year, has investors like Thiel, and is based in Gibraltar? If you think that's a publicly traded company, you're almost right. Bullish has agreed to go public at a $9 billion valuation via a SPAC, which we await completion relatively soon. And in today's video, we break down the bull and the bear case for the equity, their origins connected to the EOS blockchain, and some very interesting Numbies. Stay with us.
I'm Hannah, this is Erin, and you're watching the Piper Rundown. We analyze business and culture to help you win. Today's rundown is presented by SciTech. SciTech is a sustainable Bitcoin mining operation based out of Singapore. Their stock will be publicly traded within the next week. You can learn more at sci.tech, sai.tech, linked below.
Bullish announced a SPAC more than half a year ago, and they have still not completed the merger to go public. There's been a string of SPACs that, under the guise of more stringent US regulatory scrutiny, have been slow to hit the public markets. However, should the transaction occur, and it does have a drop dead date by the end of Q2, they say that they're going to go public by the end of Q2, the deal will be completed and could yield the Gibraltar-based company as much as $900 million in net proceeds and a valuation just shy of $9 billion. Not too shabby for a crypto exchange that did not exist 1 year ago.
Not too shabby at all. Hot damn.
Last year it was announced that they raised a considerable private round of funding from some pretty well-known private investors, including Nomura, the investment bank based out of Japan, Galaxy Digital, and Thiel's Thiel Capital, as well as capital from Founders Fund. Now, while the crypto exchange itself is a relatively new entity focused on market making, lending, portfolio management, as these exchanges are ought to do, the developers behind the exchange, Block One, have been around for a minute. In 2016, Block One launched EOS, which was one of a bevy of Ethereum killers that were intending to develop a more sophisticated, technologically advanced version of the Ethereum smart contract blockchain. Ethereum was the vanguard. It was also kind of slow, kind of inefficient, had relatively large gas fees. And so all these other projects popped up to basically say, hey, we'll be Ethereum with more efficiency, with a better design. And what ended up happening is they launched some ICOs. They didn't really launch many decentralized applications. They had a high concentration of developers in control of their network based in China, which raised some red flags. And they were fined $24 million in 2019 for the selling of unlicensed securities in the form of their ICO. So one of the things, and this is a very valid criticism that is cast in the direction of cryptos, of tokens, of coins, however you want to describe them, is that these are unlicensed securities being sold by companies, meaning that these entities are shares in a project with the expectation of future profits being issued to the holders of that entity. And while that, I would argue that is true for a large portion of the blockchain projects out there, there are also more commodity-based tokens like Bitcoin that should actually be classified as commodities. Then you have stable coins like USDC that should really be the purview of the treasury, because they're not securities, they're more currencies actually, or currency proxies, not unlicensed securities. We need to make sure we're delineating those when we start to evaluate different crypto projects. And then you have a fourth category, which are like the artistic NFT projects that really aren't any of those things. They're speculatory in the way that one would speculate on art, but no one under any circumstances buying it thinking, hey, this is a profit-making enterprise that I get to be a part of in the future. So important to understand that context, important to understand that we have seen a significant downtick in SPACs generally since their crazy peak in the 2020s. We have a lot of SPACs that are trying to close new deals, and we have a tougher regulatory environment. In addition to headwinds against SPACs, the other regulatory headwind that we have on the crypto industry generally is twofold. Rising interest rates making generally longer-term technology-type investments slightly less attractive, and the headwinds against crypto generally in the form of more stringent regulation or higher taxes coming from China, India, Japan, and Britain since this specific SPAC was announced. The other thing that has happened since the SPAC itself was announced is the company actually launched their exchange, which is predicated on using some of the principles of DeFi to do yield farming, to actually do contribution to liquidity pools, and wrap that in a regulatory bundle that actually makes it consumable by governments in the way that Binance, Coinbase, and FTX have accomplished in a number of different markets. So good things, they're building, they're actually generating revenue. Bad things, the regulatory heat is being turned up.
Well, Aaron, this sounds like a fascinating project. I'm sure you have some numbies for us.
I sure do. They were capitalized during that private funding that included Peter Thiel with 164,000 Bitcoin, $100 million cash, and 200 million EOS. Upon launching their exchange in November, we're able to generate some revenue. And something they do here that's savvy, people see it on screen, is you read that and it makes you think for a second, oh, they're doing $45 million worth of revenue in January. That is annualized revenue. So what they're actually doing in the month of January is something just shy of $4 million worth of revenue per month. So when you see those numbers, and it's helpful to contextualize, but you can see why it's helpful to them to say, we didn't do $4 million worth of revenue, we did annualized $45 million worth of revenue. It is climbing precipitously. 1 million annualized November, 21 million annualized December, 45 million annualized January, 97 annualized in February. That volume, if annualized, would be more than Gemini or Kraken. It would still be considerably less than FTX, Coinbase, or Binance. That all being said, it's still a very nascent platform with not a ton of throughput currently.
Gotcha. Well, I'd love to hear about some of the comps, some comparable companies and competitors in this space. Bet there are a bunch.
We referenced two exchanges. I would say, probably in the US, that the most two well-known are FTX and Coinbase. FTX just accomplished a private valuation of $32 billion, which is actually greater than what Coinbase is currently trading at publicly, which is $30 billion. So that is, not necessarily going to hold should FTX decide to do a public offering, but interesting that they've kind of already caught up to the Coinbase valuation given the different markets that they're trading in. Argo blockchain is one of the crypto miners that has seen itself absolutely kneecapped by the overall correction, kind of micro recession that we're seeing in technology stocks. Generally, they're down to about 300 million in total market cap. In many ways, this reminds me of Argo, not that it's the same business model, but a lot of these firms are still in the process of ramping up their revenue. And so if you take the valuation, in this case for Bullish, $9 billion, and if you take that February revenue at face value, 97 million annualized, that is a 100x multiple.
Yeah.
That is not something that is held up for many other companies in the space, Coinbase being a perfect example of it. So I think that that's one of the considerations when you think about an entry point, if this is something that you want to get into. But the other side of this, I just want to point out too, because we haven't gotten the chance to do this much in our other crypto videos, is to point out NVIDIA, which has a $500 billion market cap, because they sell the processors, they sell the graphics cards that are used in all these data facilities for all this mining capacity. And so as you're trying to think who's selling the pickaxes to the gold miners, NVIDIA clearly is at the top of the pack. But I think the argument for Bullish is this is a very large market for people that want to trade crypto. In EOS's case, there were allegations about they were wash trading. Terrible that we're not in favor of wash trading, but there are a lot of people that want to move money around. And if you're facilitating that in a relatively low regulatory environment like Gibraltar, which if you didn't know where that is the gateway from the Mediterranean to the Atlantic Ocean, then this is a place you can do it.
I guess so. All right, on to the meme factor, where Aaron and I discuss the memeability of a company on a scale from 1 to 5. 1 is the negative memes, 3 is completely neutral, and 5 are all the positive dank memes. Bullish is a great name. fantastic name. Instantly draws me in. A lot of brand recognition around there. And these crypto companies, they're pretty memeable. So I'm going 4.4.
I'm going 4.8.
Whoa!
One of my highest ever. Peter Thiel. Bullish.
Yeah. Peter Thiel, I forgot about that. Damn.
Crypto baseline.
Mm-hmm.
What was it? And DeFi. DeFi is its own whole meme thing. And it's not pure DeFi, but it is more decentralized finance than the other exchanges that are kind of more oriented towards TradFi, traditional finance, where, you know, Coinbase has all the old regulators, they have all the relationships with the regulators, probably why they've gotten through, and Bullish has run into more issues. But man, I think this is as hypey as they come.
Wow. All right, let us know your meme factor score in the comments. That is one of your highest ever. Damn. Before we move on to the bull and the bear case for Bullish, let's hear about our sponsor, SciTech, one final time. Their stock will be publicly traded within the week. Make sure you check out their website for more info, which will be linked down below. Thank you for sponsoring the rundown. On to the bull and the bear case.
There's a growing market for crypto trading generally. As we've talked about in the past with FTX's precipitous climb in valuation from private markets, there are a lot of investors that want exposure to this space. There are a lot of people that don't necessarily want to pick a specific crypto. They want to just be collecting the fees on the spread of these trades over and over and over and over and over again. They don't see it going away. There are more and more legislators that hold crypto themselves that are advocating for reasonable regulation, but not the overall outlawing of the financial product themselves. When you add in that enormous TAM, the rate of growth they're able to experience, as admittedly still a very small platform, much easier to grow when you're small than when you're large on a percentage basis. And then you put in the fact that they actually do use the liquidity pools and other protocol level, DeFi level financial principles, they're kind of one small step ahead of some of the legacy players. So you think about, in many ways, Robinhood took the logical conclusion of low fee trading all the way to zero fee, and they got to play in that space first, while the rest of the competition has to still move in that direction and figure out how to let go of revenues that they were used to bringing on. So I think that there's a lot of interesting principles, hence the investment from these blue chip companies. The bear side is there's just so much execution yet to be accomplished. They have the slide there, like we have a history of execution. It's a very short history of execution. And some of the execution of the past is not really execution that we want to be a part of the future. So you have to let go of the past. You have to say there's going to be a lot of positive steps that will occur for sure, because it's baked. I've said this so many times on the show. It is baked into a $9 billion valuation. $9 billion valuation for a exchange would be doing a third the revenue of Coinbase. They're not there yet. In this market scenario, forget everything else. If you just want to take Coinbase as the comp, 9 billion, 30 billion, pretty simple math here. They got to be doing about a third of the revenue of Coinbase or growing way faster than them in order to earn that valuation. Those boxes aren't checked. So if you like the company, the premise, the concept, I would wait for a better price. I'm not saying that this is like the thing I'm rushing into personally, but I'm saying if you like the company, I would look for a different price than the one that is currently suggested by the valuation in the SPAC in order to do that.
Fair enough. All right, that's the Piper Rundown. Thank you for watching to the end. We'd like to shout out a commenter from a previous video. On our Samsara IPO video, Arthur said, "Great, keep up the good work." Appreciate it, Arthur. We always love seeing those little nuggets of joy in our YouTube timeline and feed. Make sure you like and subscribe so you don't miss a single upcoming rundown. We'll catch you in the next one.